Hello, everybody. My name is Drew, and this is Trading the Close. And speaking of which, we're going to jump straight into charts right away because we've got earnings after the bell on Microsoft and Meta. So let's just jump into that right away so I can give you levels. Those watching live can go ahead and jot these down, take advantage of some potential day trading opportunities after hours. All right. So you see Microsoft moving up right now. First resistance, this is going to be aggressive level to shorts right around $400. The likelihood that area gets pierced if price reporting is good for earnings. Then the next area of resistance is at 405.19, followed by 413.08, which should be solid resistance on a move up on Microsoft. On the downside, we've got a close here, a gap fill at 374.39. That's going to be the first area to enter on a fall on Microsoft. And here's going to be basically the near-term wall right down here at 365.31. Next up into Meta. Meta has, as you see here, we've fallen just slightly today, but making an end-of-day push to move higher. The move up on Meta, first resistance is going to be this 576 trend line, this inclining trend line, followed by the $600 even number, both of which should be solid resistance for Meta for any sort of good earnings reporting. On the downside, the first area of support is going to be $500, followed by 469.92 cents. Unlikely that that area gets tagged today, but I'm more interested in the first at 576 and at 500. All right, so there you go for that. Now back into some market recap. So we saw today, most of the volatility happened before the market opened, and that was due to two things. ADP private sector jobs report came in at 62,000 jobs compared to estimates at 125,000 jobs. So much weaker jobs report for the private sector. In addition, we had the GDP report that we are starting to contract, the first contraction that's been recorded in 3 years, down to 0.3%. So that contraction plus the ADP private sector jobs report was like a 1-2 punch to open up the market, and it really started at 8:30 this morning. So stock prices and everything started collapsing around that time. And then right about 10 o'clock, PCE data was released, alleviating the market. And the PCE data, just for a reminder for those folks, is what the Fed uses to gauge inflation. So that came in lighter than anticipated, which was a very, very welcome relief for the market. And then since we rocketed higher. So let's get into some overview of the charts, and I can show you what we're looking at here. So to end out the day, Dow Jones is up 0.25%, NASDAQ down 0.86%, S&P 500 putting in a positive day here at 0.24%. U.S. oil is down, continuing to fall down. We'll monitor levels and show you those next support areas on the chart here in just a few moments. Gold is down slightly at 0.71%, and it was almost like Bitcoin took a nap today and didn't really even participate with any of the volatility that was going on. As you see over here, though, a lot of red on the screen, and that was mainly due to the gap down that was in the S&P 500. So let's just go ahead and jump into the S&P 500, and I'll show you what happened during that time frame. Now, you see we're moving up just fine, but if I go in the 10-minute chart and expand this out a little bit, but then plus put in the extended trading hours this morning, you can see we closed the day yesterday right here, and then we continued down just ever so slightly throughout the overnight yesterday and into the morning. And then right here is when all this data started being released. It was almost looks like it was released early for some individuals, but right here at 8:30, that data hit the markets, and then boom, to the downside we went. And then so price started coming down lower, lower, lower. Then at 10 o'clock, we've got that PCE data that was released, and boom, look at the move up to the upside, and look at this finishing close on the spiders today. Impressive move on this chart. Now, if I get back and take the regular or take the extended trading hours off, I also want to bring something to your attention. Oftentimes, markets like to repeat themselves. And it's not in essence like, say, if the price goes from $90 to 100, we're going straight back down to 90. This means that markets repeat themselves in patterns. And that's something that I pay attention to with technical analysis. And as you see here on the spiders, look at this price action that started here on Monday. Price action had this nice float up. Then we had some sideways chop, and then a boom, another accelerated move up, finishing with a bull flag, and then a drop. So see, we had this big drop here. That in essence was this big drop here. Then we had a similar float up. These two pairs of trading, this collection of candles almost looks identical. We had a move up, some sideways chop, and then another move up, so bull flag pattern, much like this. And then boom, another move up now to the upside. So we've had a move up and then a move down following these sort of patterns that have been placed on the charts. So where does that take us? You see here down at the bottom of the screen, we got very close to the support trend line. If I move back to the daily pattern, you can see here that was my first area of support. And I even mentioned yesterday that with this, the fashion of which trading was occurring right here, this angle of trajectory was likely going to stall out. And this morning was showing signs that exactly that was what was happening. However, that PCE data saved the day, but ultimately technicals told us support was going to be right here near this trend line. And sure enough, it pushed price back up. Now, if price continues higher on the S&P 500, we have resistance coming up at the 50% area of this parallel at 563.23. Now, since this area has already been tagged for support, the next support is what I have my eyes on at 537.08. Into Bitcoin, as I mentioned, with this volatility today, Bitcoin really did nothing. It took a day off, and I guess good for it since it trades 24 hours a day, 7 days a week, but still more consolidation right here on the underside of this parallel channel. The more that this occurs, the more weak this area becomes, and the likelihood then shifts to a break higher. So be watching this over the next couple of days, because I do think we're now coiled up enough to start making a move up or down from this current price action. Into gold. Gold also really didn't do too much. I'm noticing, though, these wicks down at the bottom of each one of these candles, except for this one, which mainly was an open here and push higher all day. So all these wicks are telling me that there's still a lot of buying pressure for gold. And that's to be understood with a lot of economic uncertainty out there. We don't have complete news about tariff deals. They're kind of all hanging in limbo. So still, that makes sense. Folks want to pile into gold because once those tariffs hit, I don't think they're going to go away for at least near term. But just keep in mind, too, once the tariffs go on, they can be taken off just as fast. So that's something to consider and think about if ever you're trying to make long-term investment decisions. Ultimately, though, gold support still down here at 3,100, and resistance is going to be the high end at 3,500. Into silver. Silver starting to curl over a little bit more and hasn't quite officially confirmed a bullish stance or bearish stance, on this move down. What we need to see is this green candle. We need to have a daily close underneath the bottom wick of that candle. If we have a close underneath that, that shifts probabilities to go more towards the downside, the path of least resistance. So far right now, this area is holding when price comes down in silver. We'll see if that changes over the next corresponding days. Into U.S. oil. Now, oil has now been rejected here from this trend line and has come down 3 consecutive days. Whenever price action moves in one general direction significantly in 3 days, this usually also tires out with movement. So I expect over the next day or two, we should see some sort of maybe a pause day and going down, and then maybe a further continued move. Measured move down here, which would be minor support as that $53.15 on U.S. oil. Into natural gas. Natural gas right now is kind of taking an off day too. It had 3 nice days of moving up, and that's also what I would anticipate for U.S. oil. We had 3 days going down, natural gas. We had 3 days going up, and then a pause day, and that's likely what's going to happen on U.S. oil. We'll see though tomorrow. Anyway, back into nat gas. So nat gas did get rejected right here at this trend line and is consolidating. That's what it needs to do to go higher. Next resistance, if it does beat this trend line, is at $3.73. Now, into SMCI, this was a unique play today because this also is one of my favorite stocks to trade. SMCI is known, it's been in the news quite a bit, and the stock usually likes attention, and it also attracts a lot of investors because it's in the semiconductor space. And when all these investors get involved with this stock, a lot of volatility can occur, which creates ample opportunities for day trading. And when I heard yesterday that SMCI came out and warned pre-earnings, because their earnings don't take place up until May 6th. So we still got some time left for earnings to take place, but they came out and warned saying, hey, our revenue is down roughly about 10 to 15%, but our earnings per share will likely miss by about 40 to 50%. So we're talking about significant cuts in the markets, and investors did not like that one bit. So into SMCI again, and you see here, if I flip on the 10-minute and pre-market trading hours, we had a big fall when that news broke right here. And then price action got a big rebound. Volume was very big right here with buying pressure, trying to hold up this stock. And then for after hours, that was a big candle. That was actually the biggest of the entire day over here. But look how that candle, the volume, dwarfs in comparison to what happened right out of the gate this morning. This was fantastic opportunity for buying pressure to get a move up on SMCI. Now, SMCI, you see here, it pierced this first level of support that I have and then rocketed higher. I was lucky enough to get into a day trade in this stock, and I was in and out of it in less than a minute and captured over $2,000 in gains. It was a great trade and one that I love with SMCI. You know, SMCI will give us these benefits of over and over volatility. And if you're a technical analysis trader, watch this stock, study it, because it provides, while there's volatility, so many chances for you to make profits. All right, so where is SMCI going to go from here? We already see it's fallen so much this year from its highs. This was all back on the back of news of them getting, an accountant secured with BDO to provide their earnings reports. So price went up and then has since come down. And the reason prices come down so much now is because a lot of customers are interested in the newer NVIDIA tech. The SMCI still has some of the older tech, not to say it's obsolete, but a lot of customers are either wanting to purchase the Blackwell chips or they're going to hold off and wait till new ones become available, because all of NVIDIA's chips are already sold out and are already allocated to the businesses that have purchased them. So SMCI is under a little bit of pressure over the last quarter, but I still anticipate once these new chips to come out, SMCI will likely go back and move higher. First area of resistance is going to be this gap fill right here, which is $32.90, followed by the bottom end of this parallel channel. And if you know anything from watching these videos, whenever these parallel channels are broken, they often like to go and retest that parallel channel, currently around $36.18. Now, into some earnings for tomorrow and some levels to keep in mind. Now, Apple is not reporting today. As I said, they're reporting tomorrow. But the first resistance I see on a move up with Apple is 223.89, and a move down would be at 193.16. More aggressive trader could enter a long position on Apple here at this gap fill, which is at 199.74, in essence playing the psychological level of that $200 pierce. So that would be a first more aggressive entry, and then more conservative right down here at 193.16. But then also notice this price action right here, in particular, this pivot high and move down to this pivot, and then this next corresponding lower high has created a downsloping parallel channel. So as long as Apple maintains in this channel, we could bounce back and forth and move in a downward fashion throughout time. Now, once we break this to the upside, now we can start talking about a breakout move. When we're hanging out down here, we're having to pay attention within this parallel for any sort of resistance levels that will help with finding out levels to get out of if you're long, or levels to get into to short if that's a play that you want to make. Into Amazon. Amazon also has earnings tomorrow, and you can see I've got support resistance for Amazon down here at 167.32. More aggressive entry is going to be this gap fill here at 173.18. So 173.18 and 167.32 should be great support for a day trade on Amazon after hours tomorrow. On the move up, we do have resistance just above this trend line, and notice how close we are to it too. Usually with earnings, I want to have at least, especially with these mega caps, like a 5 to 7% move. And then I start to become interested in entering positions at that point. As we see now, we have after hours movement. We're moving up on the stock chart of Amazon by $3. So by tomorrow, this area right here might even get tagged. And so if that's going to be the case, the next area of resistance is going to be this gap fill here at 196.01, followed by that psychological number of $200. Still, these levels remain down here, though, that I mentioned on the downward side for opportunities to trade. All right, so that brings me to a wrap here on Trading the Close. Thank you guys so much for watching. Again, my name is Drew Dosick here with Verified Investing. Really appreciate you guys. I look forward to bringing some more details tomorrow. But first, got a message from Blowfin, one of my favorite brokers to use and exchanges for day trading crypto. Thank you guys so much.
Hey guys, Lawton here with Verified Investing, back with another Blowfin video. So a lot of people are kind of wary about crypto because it could be extremely volatile, and that's true. But what if I told you that Blowfin provides the optimal opportunity to see how you would do on a simulated account, all for free. So let's check out my screen. So on your Blowfin account, you can go here to futures and click on demo trading. Right here, you could trade on a simulated account. This is an account where they give you $50,000 and you can trade like you normally would. Of course, those $50,000 are not withdrawable. Same thing with your profits. But there's even a leaderboard and they have demo trading competitions where you can actually get real money. But for people like me, when I first started looking at crypto, I wish I had this opportunity. This demo trading allows me to trade something. So let's go down here and let's say with hat, right? Taking a look at this chart, I think it favors a move to the downside. So let's say, and I'm using my simulated account, I want to put $10,000 into this trade. And then a simulated account with 3x leverage. So let's see how I would have done. Additionally, I can add, let me make sure I get filled first. Yep, I can add my stop loss and my take profit levels in the same way that I would while using a live account. Again, guys, this is the perfect opportunity for those of you who have never traded crypto before and explore it for free with no risk to you. Thank you again to Blowfin for sponsoring this segment.